Good morning. It's Vijay here. Today is Friday, 8th November 2024. Welcome to yet another episode of Market Commentary, where we discuss what happened yesterday and what is likely to happen today. And in this episode, we will talk of a sensitive thing called the what the people are panicking about. What is happening in the last few days has been there has been a unbridled panic created by social media people, and these are the guys who are having no skin in the game, but coming on spaces, coming on other things like Clubhouse, for instance, and talking about numbers like index will go to Nifty will go to 12,000, 14, 16, 18. So just because they know the numbers, they simply spout out the numbers, but they don't reveal what positions. They laugh at retailers because retailers put in a lot of money and now they have nowhere to go. That is what these guys are doing. So I am trying to caution people, saying that do not believe these guys because they have no stake in the market. And when they have no stake in the market, then what is their credibility? So what is happening today is what I call a shopping festival. Once in a while, you have festivals where you celebrate by doing other social activities, but you have also a shopping festival as far as the stock market is concerned. Deepavali was one such festival where a lot of people talked of Murat trading picks. We did also do something between Deepavali and Pongal. What will happen? We picked actually Pongal picks, not Diwali picks as such. Subsequently, the prices have fallen for lots of stocks, but our portfolio, thankfully, has done well. 7 out of 10 stocks are positive over what happened on Murat trading day. They are still not, gone up so much for us not to bargain hunt. And apart from this, there are lots of stocks which are in bargain territory. There are many stocks also in the what you call the RDX sector, that the railways, defense, and space, which are still highly overpriced, and there were a long way to go, especially railways and defense. Railways results have been coming, and they have not been good at all. So they may have a long way to go. But that doesn't mean there is no festival of it. So before we go into talking more about what should we be doing. So why do markets fall? Markets fall because of incessant selling. Second, it is because of lack of buying. And lack of buying will happen when there is no liquidity or less amount of liquidity. There was plenty of liquidity last year and even in this year till around 2 months ago. And now the liquidity since July has been drying slowly with SEBI's actions and RBI's actions. So therefore, less money is coming into the stock market, the speculative money, which is not a good money. The SIP money is good, which is coming regularly. So that has been pulling out. So therefore, the prices have been falling. And therefore, you will continue to see that happening in many stocks. But we have now reached a stage where there are a number of stocks which are bargains, and these stocks are held by strong people. They have strong fundamentals, and sooner or later, the market will realize it, and then they will start buying. So therefore, yesterday, for instance, was a classic case of money having left the market, and therefore there are no buyers, and therefore the market started falling. If you look at it yesterday, across the board, all the indices, all the sectoral indices showed negative, were negative. Now, even PSU at one point of time was doing well, and that also has come into negative territory. In fact, it closed flat. What about this morning? We enter today with Dow Jones having closed flat, Nasdaq closing, and Nasdaq and S&P doing very well yesterday. And European markets did very well despite the German government falling. The German government fell, and yet the DAX went up like anything. And over the night, we had our Powell and the Bank of England governor reducing interest rates. Before that, let's talk about what happened to the FIIs and DIIs. FIIs sold around 4,800 crores. DIIs bought around only 1,786. So FIIs routine has been get up in the morning, take bath, press F2 button, go to sleep after that. Whereas DIIs have been struggling to maintain some semblance of order in the market that is not required actually. Let the FIIs sell. It doesn't matter because they've sold in the past at crucial junctures and they have made permanent or let's say significant bottoms. So there should not be any fear of FIIs. FIIs sold huge amounts in the past, which I will show you through a graph. in the next few minutes. So the FIIs may be selling for whatever reasons, but you can attribute any reasons. But at the end of the day, the strong people are selling. And yesterday was what I call a buyer strike, where the buyers decided enough is enough, so we will not buy, and the prices drifted. But what one noticed also was the selling also abated in the first 1 hour itself. Nothing much happened the entire day across the board. So most of them closed, most of the stocks or sectors closed near the lows, but they did not break the morning lows. So yesterday, Bank of England cut their interest rates. Fed countries cut the interest rates. Now here is, and then today is the China stimulus, which is supposed to be a big bang stimulus. So you may see some metal stocks doing well, but we have to watch it carefully as to what kind of stimulus it is. Now I will take you back to a chart here where, 18 months ago, in between November of 2022 and March of 2023, if you remember, the Nifty and Bank Nifty peaked out in December of 2022 after a hectic rally between 15,000 and odd in June to around 18,800 in December. So that was a huge rally. That is about a 20% rally. And that rally carried lots of stocks, but they all got crushed in the next 3 months, mainly because of the Adani Hindenburg problem. And by March mid, everybody had lost hopes, including the biggest of the bulls. You can go back and look at the archives of CNBC or any channel, or on Google. You can look at what media interviews they gave. All of them were panicking. They were talking of entering the market in bits and pieces. When you get prices which are bargain prices, you should not be entering in bits and pieces, but you should be jumping and buying into the stocks. Today, such a situation, in my opinion, my analysis has come in many stocks, mainly bank stocks, which Bank Nifty, for instance, is 35% of the Nifty. So 35% of the Nifty is bargain basement prices. In that, PSU banks are ultra bargain basement prices. Then you have stocks like Reliance, which are waiting. I think Reliance should do well as we go along. Same thing with IT, which is another 10% there, and some stocks in the FMCG and pharma. So you have the Nifty, lots of stocks in Nifty itself, which are at bargain prices, but there is nothing to say that it will not fall another 10% or 5% or 3%. We do not know that. Only God and fraud can decide what is the market top and market bottom. The God is there up above, the frauds are there on the spaces. So they decide what is their bottom, but then God will decide finally as to what is the bottom. So that time between January and March, between November and March, or December and March, those were harrowing months for a value investor. For a momentum investor. For a value investor, they were really great months. So if you're a value investor, if you believe in the stock market, if you don't mind taking a 10% loss in Nifty or even stocks from here, then in my opinion, it looks like a very interesting time to be in. Remember, I'm not a SEBI-registered advisor. My ideas are a little contradictory to the general milieu, but that is what I am. So if you like it, share it and subscribe. So at that point of time, for instance, coming back to the topic at hand, 11% down, everything looked gloomy because Adani controlled Indian markets is what people felt, but it was completely wrong, because from there you had railways, defense and space stocks took off like a rocket, and we had a fantastic bull run between 18,000 and 26,000, another about 50% rally from there. So you should not worry of what happens in the short term, especially when today fundamentals are okay, not great, but they can be better if you have fiscal stimulus which can come, because the government holds the keys to that, and I'm sure they are worried about it. RBI cannot do too much of a monetary stimulus. It is okay, doesn't matter. More important is the fiscal stimulus, which will turn the wheels of the economy and make it grow faster. I think that is on. So I feel one should not panic, one worry. It is just a matter of time before things get better. I at least am confident, I am bullish on those stocks which I mentioned in that in my Pongal list. And there are many more stocks. Pharma, I'm looking at some interesting stocks are there. Lupin has come out with very good results. So I am expecting pharma to do well, especially with Trump coming. Things should be do well for pharma also. So we are buying on decline. So BTFD buy today for December. So that is my mantra right now. So whatever you do today, hope it is